Hello, everybody. Welcome back to another live stream by the Everyday Growth Advisors. Happy Wednesday. Welcome back. It is Fundamental Wednesday. Hope you guys are having a great week out there. It's a tough market environment, man. Honestly. It's been a pretty challenging week all around for traders. But that's why we hold this live stream. It's to give you guys a bit more color on things that can possibly happen. Today we're gonna do some fundamental analysis on Goldman Sachs as well. So I hope you guys enjoy the stream. And yeah, let's get it. Let's keep things interesting today. If you're here, ready with your coffee, bagel, and your breakfast or whatnot, enjoy while I break the market down for you. Don't forget to smash the like button if you haven't already. And remember to subscribe if you haven't. Okay. Cool. Morning, turn up the mic. Is it not loud enough? I feel like I am pretty loud. I hope that it's not soft, but I think that it should be loud enough. You might need to turn up your volume, brother. Okay, let's get to it today. Let's see what Bloomberg's reporting. Let's get an idea of the news here. If indeed the sound is really low, please let me know. And I'll try to, I didn't change any settings, so it should be fine. Okay, let's see. Hong Kong's recession extends with a 9% drop in second quarter. Okay, bearish news. US stock futures edge up before Fed dollar dips. Okay, another slightly bearish sounding news. US is about to unveil the ugliest GDP report ever recorded. Extremely bearish news. I think we can see a pattern here. Gold's record rally fueled by unlikely buyers. Okay. Occidental discusses 4.5 billion asset sale to Pertamina. Okay, that's a petroleum company selling a bunch of other assets to another petroleum company. Let's see here. Okay, sound is fine then. Come on, Byron. I don't sound loud. I'm just trying to be, I'm trying to be adequately sounding. All right? Leave me alone, man. You always bust my chops. I'm just kidding. Welcome into the stream, guys. Hope you guys are having a good morning. I like to keep it lively here. We don't like no boring streams, okay? Because we like to keep it interesting for everybody. All right, let's continue on here. Lots of bearish news today on Bloomberg. U.S. forces chief pledged to help with Japan Chinese ships. Japan daily virus tally passes 1,000 as Osaka, Tokyo cases surge. Thailand extends state of emergency for fourth time. Ex-Fed economist says her profession is racist, sexist, and elitist. Wait, what? Okay, I'm not sure what that one's about. U.S. warns against planting mystery seeds from China. COVID first are pushing world's mega rich to set up in Singapore. Hey, okay, interesting. Why would they come here to set up? I'm not sure. I don't know what is so special about Singapore. Personally, I don't see what's so special about my country. We need less people here, guys. That's all I'm saying. Bezos, Zuckerberg, and Musk have made 115 billion this year. Can someone say cha-ching? Though I think like the biggest winner from the last year was Mackenzie Bezos, right? She just made like a cool half-hundo bill, just married to this guy and divorced him, and booyah. All right, let's see on Wall Street Journal here. U.S. stock futures tick up ahead of Fed decision. Slightly bullish sounding news. SoftBank saw opportunity in Wirecard before it unraveled. Okay. Europe's banks reveal fuller picture of coronavirus impact. Riskiest bonds are on the rise in Europe. CBE proposes plan that could curb advantages of false traders. Huh. Okay, this one might affect all of us. What is that plan? It's operating to seeking bring first periodic auctions to one of its U.S. stock exchanges, which could limit the advantages of high frequency trading over. Okay, that's not going to affect us that much, but it'll affect market makers. Interesting. AMD has to stay on the edge. Okay, AMD I think beat earnings, right? So they blasted off the speed of light last night. Well, my night after the market closed or something. Okay, news on the Wall Street Journal sounds hybridized, but if it's my bet, I would say today the market's going to attempt to go bullish. We've had quite a bit of nastiness happening the past few days with sideways movement. We're kind of building up towards a big move. Now, there's another thing that you got to take note of. It's the fact that SPY is also forming a technical bearish pattern. And yeah, okay, let me get through this real quick. So let's do the technical update with SPY here. Oh, right, we forgot pre-market movers. My bad. Pre-market movers. Let's see on both of them. Pre-market movers. Okay. On Market Watch, we have L Brands. FireEye. This company has been like, man, I've been seeing a lot of flow on it recently. AMD up 11%. That's nice. SX. This is a REIT. Also up 6%. Garmin. I'm guessing these are all companies that reported earnings. So looking pretty decent here. Spotify down 3%. That I can't say I didn't see that coming. eBay. Okay. Alright. The movers out of the pack. AMD. And I think AMD is just like, at this point, it's starting to get to a point where it's approaching irrational levels. Okay, obviously we'd have to do a valuation of business to find out more, but I say AMD is starting to become irrationally overvalued, just by relative valuations. Okay, on this side we have GE, Intel, Microsoft, Exxon. I like Exxon as a long-term hold. JP Morgan. Okay, nothing else here. Not really. Today we have again another oil report. We have, let's see here, goods trades balance. This is gonna be GDP related. Retail inventories, ex auto. Okay, and then we have pending home sales, which is a high impact event at 10. So I would actually wait till after 10 to make any decisions. Today we have a huge earnings calendar. Like a huge. It's a crazy. Facebook, PayPal, Qualcomm. What else? Lam Research. Cognizant, O'Reilly. O'Reilly is probably going to be bearish. I don't know. Actually, you know what? I take that back. It might actually be bullish. Okay. That's all for today. There's a lot of companies reporting earnings. Let's look at the NASDAQ real quick. Okay. Not many big movers here. Tesla up 1.5% roughly. Micron up about 1%. Nothing that crazy. Okay. Well, majority of the movers are NASDAQ related and then some Dow as well. So let's have a look at the NASDAQ first. We've been on an uptrend for a while, right? And obviously this can keep going. This uptrend can keep going all the way. but we do need a retracement before we continue, right? So the retracement did come, and oops, and what we're seeing here is NASDAQ made a double top, like a kind of a bearish pattern, and then started selling off, found support at the 200 moving average, and now is making higher lows. So I feel like it could obviously rally here and go back to where it was, or try to attempt to go back. But in any case, I have drawn this downward channel, which, you know, if it decides to get rejected at this level, then we may come down to test this level again at the 38.2 or the 50, right? Either here or here. Those will be two potential wave downs. Okay, the wave ups are upon the break of the 23.6, and we'd see the NASDAQ go up for a triple top, a test of the all-time high again, which is contingent on a lot of companies reporting stellar earnings this week. Okay, so the market seems to be holding off on a lot of things. Don't forget that the Fed is also meeting, and then also there is a antitrust Senate hearing, or yeah, I'm pretty sure it's with a lot of politicians, okay, between top tech companies, and that's the first time Jeff Bezos is going to be testifying as well. Looked for some volatility. I still say that this downtrend is intact, right? The downtrend is intact until we break out of this level here, right? So I remain bearish on NASDAQ and tech until we can make highs above this level. Then I would be flipping towards the bull side, okay? So this key level here would be the level to watch, which is going to be between, let's see here, I want to say 10,700, 10,600 level, okay? Very key level to watch there. So where it is right now, all the way to above 10,700 would be a very key level to watch. If we break above that with good momentum, chances are we're going back to all-time high, all right? If we stay within this channel downward, get rejected at the 23.6, which is roughly at 10,670, then we will continue on the downward trend trajectory. Okay, that's the story with the NASDAQ. Now with the SPY, which is S&P 500, this is SPX, which is the same thing, right? Well, you can see once again, long-term bullish channel, right? We've been in an uptrend on the daily as well, looking very nice here. And we definitely need to push up to all-time high here to catch up with NASDAQ, okay? I've been saying this for a while, that the S&P 500 and the Dow Jones need to push up to catch up with the NASDAQ. So I wouldn't be surprised, okay? I wouldn't be surprised if all the top market performers, and what are the top market performers? They will be indeed Dow Jones, right? The top 30 companies in the United States of America are part of the Dow Jones. Look for those to be pulling up the market, okay? And look for those companies to have surprise earnings beats, which will pull the entire SPX up back to near all-time high or at all-time high, okay? That is that's the idea here. We have been looking at that for such a long time that, you know, we shouldn't lose focus on that, okay? Yes, tech is selling off, but that doesn't mean that other things can't rally. And those other things are industrials, energy, and consumer staples that are also part of the Dow Jones Industrial Average. And we have a huge gap to fill up here if Dow can remain bullish, okay? So tech off the back burner. Stop looking at tech so much. Concentrate your efforts on other sectors. There is much more money to be made in other sectors. Stop looking at only tech because it doesn't help you, okay? That's my honest opinion. And of course, take it or leave it. That's something that I bring to the table, and I want to educate you guys on, all right? Once again, welcome into the stream, guys. I appreciate all of you guys being here. Make sure you smash the like button. That's the only thing I ask for when you are here. I'd appreciate it if you smash the like button. And let's try to get to 90 likes. If we can, there are 95 people here. If you like the stream, I would appreciate it. Gracias in advance. Okay, so and then we have SPY talked about, we have Dow talked about. Dow also remaining in a firm uptrend here, looking interesting for sure. And then that kind of concludes your ticker, the pre-market breakdown for SPY, NASDAQ, and Dow Jones. If you have questions, post it in the comment. I'll try to answer them. But that's my outlook right now. I remain bearish on NASDAQ, which will possibly pull the market down, but only 20% of SPY. And then the Dow Jones might come down along with it as well in the short term. Okay, unless we can break out of this pattern. We've been establishing lower lows and lower highs. Okay, we need another lower low to confirm that we're in a downtrend. This low wasn't enough. Okay, but if you look at it, we're kind of going into that territory, right? So we'll see how this pans out. It's going to be interesting. If tech surprises, beats earnings like one after another, then expect NASDAQ to just zippity zip zip back up here. Okay. All right. That's a summary of that. Hope that's helpful. And all right, let's get to this now. So the story continues with Goldman Sachs here, which is our ticker of the week. And Goldman has retreated back exactly how we had spoke about on Monday. I did say that the ideal level to enter Goldman would be at around the 190 mark, which is the 38.2 Fib retracement. Since last live stream, we didn't really move that much. We literally went from where it was to where it is now. Not much movement. Okay, it did turn bearish here, as we expected. I did say we'll go down before we go up, right? So I would like to be a buyer of this stock only when we hit the 38.2 Fib retracement, which is at 190, to find a support at this level where the green line is. Seems like a good play for the upside, since this is a dual zone, a zone where both support and resistance occurs. Okay. Anyone who's taken the mentorship course will know what I'm talking about here. Okay. So the dual zone allows you to confidently tell that this is a heavily contested zone for supply and demand. Hence, if Goldman were to come down here, I feel safe taking a position to play the upside. Now, fundamentals wise, I was doing a little research and I feel like it's a great stock to own. Compared to its competitor, it has superior financials. Now, the thing is that it is extremely hard to do a intrinsic valuation on a investment bank. Okay. Now, I'm not saying that you can't. All I'm saying is that it's very difficult, and for that reason, I'm not even going to attempt to. There are too many variables that get taken into account that you would assume, and you can assume wrongly. Okay. But looking at its, let's just go through its 10Q. Go through its, there's this research report that I found on Morningstar for Goldman as well. And also some of its important documents on the 10Q here. So we can see what it has. Obviously, we're not going to read all 356 pages. We're going to read what's important to us. Okay. So Wait a second here. There we go. Whenever you read the 10Q and there are too many pages, what you can do is find the content page and then skip through to the pages you want. It's usually on the first or second page. That's my advice. Okay, but first let me get in a couple of these questions here. See what people are talking about. I know that you guys are anxious with a lot of tickers. But remember that this stream is an educational stream. And that's always going to be my priority. It's to give you guys as much value as possible. The tickers will be broken down after I am done with the fundamental analysis. Okay. Morning. How you doing? Okay. Sound fine. Great. BA up even though got smashed in the ER. Well, don't you think that investors were expecting that though? And look at this little bit of TA that I did on Boeing. I don't know, man. It's been looking like it's coiling for a while, and I feel like it's coming to the time when it's about to like either it's gonna have to do something. It's been trading above this channel for a while. Actually, let me get rid of these fans. This fan that I drew, it's more like a pitchfork. We had a descending triangle for a while that we've been squeezing into, right? I turned on the extended hours, but let me take it off real quick. Here you go. This is a bit more, a little more easier to look at. And let me turn off the OBV because it's just super distracting, I guess. Okay, great. Now, obviously, looking at how it moved below the moving averages, right? The candlesticks are below. This is a bearish sign, but then it's also been like consolidating into this little triangle, and so once it breaks out of here, this will be another revisit of what it did before. It has done this exact same thing before. Okay, if you look back, you'll see it on Boeing. It did the exact same thing before. Squeeze into a triangle, went even below where the support was, and then boom, it shot up like crazy. Over the next, I don't know, couple of weeks, it went all the way up to from 120 to 220 in a matter of 2 weeks. Okay, so Boeing is still a great company in the long term. It is in a duopoly, okay, which means to say there are only two companies that rule this industry. It's them and Airbus, okay. There is one more, but then it's not really significant. Embraer is the other one, okay. So why did it go down despite earnings? Well, it's a simple case of people still value the stock with a premium, okay. But we'll see what happens today. The market's not open, so we don't know what the actual effects of the ER are. Only big boys have access to after hours, remember that. And some selected few. Are you in Thailand? No, I'm currently in Singapore, Douglas. Morning, we knew BA earnings were going to be bad, but not that bad. I'm more surprised at the reaction, but it seems that their cash flow is better than expected. Is it possible we hit a bottom for BA? As I just explained, I think that investors are starting to price in a risk premium. It's kind of like people that believe in the company's future value are starting to buy up the stock, even though its earnings were a little worse than expected, right? But the thing is that we were expecting Boeing to have terrible earnings, right? That's all built into the stock before the earnings is done. Okay. All right, cool. Welcome into the stream. Make sure you smash the like button. Come on, guys. I'm sure we can get to 90 likes today. Can we do that? Please, pretty please. That would be nice. So let's go back to Goldman here. Looking at Goldman Sachs, I was reading the second quarter earnings results. This is what we went through the other day on Monday, which I briefly explained what the company does, right? And we were talking about how, as an investment bank, it actually has quite a few um, standout qualities. Now, the thing is, what are not all valuations are the same. Okay, for example, I usually use this infographic to value majority of businesses. Let me show you. We usually use this one, right? I use it a lot. I show it to you guys all the time because this is what I usually use, right? This is a good, like, 1, 2, 3, 4, 5, 6-step method to really value a business correctly, right? 1, 2, 3, 4, 5, 6. And they're also kind of like staggered in a way of importance, right? This is the most important, this is the second most important, third, fourth, fifth, sixth, right? Now, for investment banks, they're not valued like a regular business. Why? Because their revenues are generated from cash flow, right? The more money they have or the more money they manage, the more money they make, okay? So their valuation metrics are completely different. And that's the reason why a traditional DCF doesn't work on a company like that. Because the assumptions you make are going to be completely different, okay? It's not like you're valuing a business with inventory. You know what I'm saying? It's like if you have a business like I don't know, Amazon, where you can look at its inventory and say, oh, okay, it's this and that, and they have tangible assets. Well, that's the thing. It's like tangible assets give value to a business, right? But assets under management, that's a different kind of a intangible asset, okay? So it's money is not specifically how do I put this? When a bank is managing money, yes, it's considered an asset, but it's also a liability, right? So it appears on both sides of the balance sheet, okay? And therefore, it's a little more difficult to value a business like that, okay? So let me go through a couple of things that I feel are important for investment banks, and this is where the real juice comes in, okay? So things that you really want to look at for investment banks are, first things first, PE ratios compared to the competitors, right? So Goldman's PE ratio is 31 versus Morgan Stanley at 9, right? I'm just doing a rough comparison here, okay? Now, PE ratios are not helpful unless you know what the earnings trajectory of the company is. So let me put it this way. What is PE? This is the price over the earnings of a business, right? And if you take this and you multiply it by EPS, right? Then what you do is you're crossing these two out, but you're getting just the price, okay? But you're getting the price multiplied with comparably the other company's earnings, okay? So when you're doing this method, we call this a comparables method, okay, in finance. And what this does is you get a comparable PE ratio for both businesses, okay? So when you're comparing PE ratios, you're comparing them with respect to another competitor within the same industry. And that basically helps you to value the business a little better, okay? It's like you wouldn't compare Goldman with Tesla. No, they don't do the same business. You would compare Goldman with another business that has similar PE, like its own, okay? So for example, here Goldman has 31 PE ratio and Morgan Stanley has 9. We would have to find out how much their ratios are differed from one another, okay? So that's one of the ways you can start to value a business. It's called a comparables method, okay? Now I looked at Goldman versus Morgan Stanley, and by the comparables method, Goldman is still considered slightly undervalued, okay? Morgan Stanley is also considered undervalued, All right, so this is based on their next metric, which is the price over tangible book value. Okay, so remember how I was saying that even though assets like cash appear on the balance sheet, they also appear as liabilities in some forms because they're assets under management. And that's the reason why banks have a outstanding amount, and they have been taking increasing outstanding amounts on provisions. They call them provisions for bad loans. Provisions for bad loans. Okay. So they have been increasing provisions for bad loans. And so what you have to do is you have to definitely take into account that those provisions for bad loans are things that are going to affect the bank's balance sheet, right? Now, by taking the price of the stock over the tangible book value, what is the tangible book value? That is the true value of the business's tangible assets, okay? And the true value of the tangible assets are assets that you can touch, feel, see, right? Like plant, like property, equipment, right? What computers does Goldman own? What buildings does Goldman own? Land, right? Some of these things are depreciable, right? They can be depreciated over time. Some of these things are amortizable, except for land, right? Obviously, land you don't depreciate or amortize land, right? But the rest of the stuff is. So over time, they lose value. Tangible items lose value over time because they're objects, right? So by taking the price over the tangible book value, which you can find in the 10Q, right? All you go here and do is you go tangible book value. There you go. So it says it right here. See, tangible book value. Okay. As of March, they had a tangible book value of $214.69, right? Let's go back here. Goldman Sachs. Stock is currently trading at roughly $201.59. Okay. So the tangible book values would be simply the price of the stock divided by the tangible book value, which is 0.93, right? And you generally want this value to be less than 1 because it simply is giving you a metric on how the price of the stock is with respect to its tangible assets. If this is more than 1, what it means to say is that the price of the stock is higher than the tangible book value, right? So less than 1 is pretty decent, right? It's not overpriced. That's what I'm trying to say, okay? It's not overpriced. Okay, now you would have to repeat this process for a bunch of other banks in a similar class, okay? And so this is literally how us financial analysts come up with some of these metrics. Now, I know many of you are sitting there and being like, what the hell is this guy talking about? Okay, I know it sounds crazy. I know what I'm talking about is probably difficult to understand, but I'm trying to teach it to you in a way that, you know, maybe you can understand it. Simple, easy, digestible method, so that you don't have to scour the internet all the time just to get this info, okay? By the way, if you guys are enjoying the stream so far, I'd really appreciate it if you smash the like button. Also, let me know what you think about the stream so far. You know, I really like feedback, and tell me if you find it difficult to understand, easy to understand, is it insightful? These are all important things for me to get feedback on, okay? Because I want to improve the stream and make it better for you guys. So let me know, okay? All right, now the next thing that you want to look at, obviously, for banks is the ROE, which is the return on equity. Now, obviously, why is ROE important? What are banks trying to do? They're trying to make money for their shareholders, right? Banks increase in value and get more assets under management when their shareholders make money, right? If you and remember, Goldman is a investment bank. Okay, they're an investment bank. So their main game, okay, is to make money for shareholders. That's the only way that they can get more assets under management, and then they make more money by managing those assets. Also, they make a ton of money by orchestrating IPOs and mergers, acquisitions, right? That's what a investment bank does, okay? Buying companies, leverage buyouts, name it. Those are all functions of investment banks, okay? So you got to understand that Goldman is a money machine for shareholders, okay? And this is along with other investment banks. So the return on equity is a very important metric to measure the firm's effectiveness in generating capital for shareholders. Okay, so looking at Goldman's return on equity, it's about 8% as of last year, right? And we can look at Goldman Sachs ROE history. And hopefully MacroTrends has this. Perfect. Here we go. And we can look at Goldman Sachs ROE history for the past maybe 5 years. So in the past 5 years, we have seen, let's have a look here. So 2015, right? It went from double digits to single digits, but we are still in positive territory, and then went back to double digits last year. Now, remember one thing. Investment banks make a lot of money from situations like the coronavirus crisis. Okay? Why? If you're a rich person, right? What are you going to do during a crisis? You're going to put your money down where you think people can make money for you, right? You get scared because you don't want to lose your value. And that's where wealth management comes into play, right? Investment banks do that. They charge you a fee. It's kind of like, charging you a fee to manage your money. And that's how investment banks make money. So Goldman stands a unique opportunity to make money from the situation. That's the reason why its earnings were great, right? They had great earnings, man. Okay, net revenues were up. They made a shit ton of money from what was it? It was here. I was gonna say assets under management, right? Look, consumer and wealth management. Look at this. Net revenues in consumer were 1.36 billion for the second quarter, 9% higher than the second quarter of this, and 9% lower than the first quarter of 2020. Net revenues in wealth management were 1 billion, 7% higher than the second quarter of 2019, due to higher management and other fees, including the impact of consolidated, primarily reflecting the average assets under supervision and higher transaction volumes. Net revenues in private banking and lending were lower, primarily reflecting lower interest rates and incentive fees. Okay, so now, the first thing that I mentioned offsets the second thing. Okay, we have multiple things acting against this bank. The first is a low interest rate environment that affects financials in general, and then the second is a greedy mentality that also creates a situation where the market wants Goldman to perform, right? So with the stable ROE, people will continue to invest in this stock. Okay. Now wait a second here. We're looking at the right, or this is the right one. Yes, I'm pretty sure this is right. Okay, I'm not sure why it's not showing the rest of the stuff. Interesting. It was showing it earlier. Never mind. Okay, never mind. It's fine. It ain't nothing. Okay, cool. Let's see here. Can we take fair value from different sources and take the average as our fair value? Yes, you can. Just be careful. use a high, mid, and a low approach. I think that would be a good way to do it, in my opinion. But also remember to be careful with where you're taking analysis from, because analysts sometimes, I personally don't listen to other analysts. I like to do my own research. And if I'm wrong, at least I'm wrong on my own work, and I can learn from it. When another person's wrong and then you follow their research and then you get it wrong, you start to get pissed. Like, for example, Morningstar has Goldman Sachs valued at 218, I think. Okay. Now, if you said, "Oh, that's the value," then like if Goldman doesn't get there, you start to feel dejected, right? So don't follow other people's valuations. Okay, let's have a look at the only thing I want to look at here is actually its financial health, right? In general, they made $2 billion in net revenues here, from 13 billion altogether around the entire world. Global markets, asset management, consumer wealth management. They make the most money from investment banking, which is equity underwriting, which is when companies IPO, debt underwriting, when companies want to get debt from public markets. Okay. Like selling bonds, that's debt underwriting. Financial advisory, that's also under investment banking. Corporate lending, okay, very small portion of that. And then an even bigger chunk of the pie comes from FICC, which is fixed income and a bunch of other things, commodities, etc., etc. Okay, consumer and wealth management makes up a smaller percentage, but I see this is a pretty high number compared to how it usually is. So that's one thing you got to keep note of as well. Segment wise, 62% comes from America, EMEA, and then Asia. Okay. This is the statement of earnings, which is kind of kind of an income statement. Well, this is more of the income statement here. The income statement basically gives you the revenues versus the expenses. So kind of assets versus liabilities, and then deducting them out for the net earnings applicable to shareholders. So that's pretty decent. Cash and cash equivalents. They have current assets. Those are okay. It's looking good, to be honest. I mean, the debt over equity is 3.2. They have a little bit higher debt, but that's normal for a investment bank. Remember that their job is to lend money out. It's not too high. It's looking good. I think that Goldman will have considerable upside, but I would only purchase it if it comes down to 190-ish, right? 190-ish would be a sweet spot for me to purchase this. And then, hold it till it kind of goes back to its all-time high. But however, you have to take note that the interest rate environment is going to affect this bank, okay? So all in all, I'm bullish on Goldman Sachs, that's for sure, but I wouldn't buy it at this level here. I will wait for it to come down a bit more before I get it. 190 would be a sweet spot, and then taking this into next year or so would be a good move. Buying shares and holding them. Interest rate environment with negative interest rates causes downward pressure on all banks, since inflation eats into earnings and the risk-free rate. So be careful with that. Also, in terms of financial leverage, return on assets. What is the return on assets? It's about 0.68%, which is actually decent. For every dollar that it invests, it gets back 6.8 cents, right? 0.68% is, oh, it's 68%. Oops, my bad. That's not very good. I thought it was 0.68 versus not with the percent. But its total assets are able to cover its liabilities, which is still okay. And it still has a good amount of cash on hand, 100 billion, and it's going to make provisions for more as well. So, all right, cool. That's that with Goldman. Done and dusted with the fundamentals there. If you want to go read the 10Q, there is things to read within the litigation that will be important to cover on your own, okay, because it's a very long document, not going to go through it. But I think I went through majority of things that I want to go through. Let's do a couple of tickers here and see if I can get through them in 15 minutes or 13 minutes to see how quickly I can do these. All right, rapid fire round. Facebook, August 21st, 252.50. Facebook. Looking bearish to me right now. Oops. Facebook's looking bearish. Recently broke down below. Oops, I forgot my OBB. Let me have that on. Okay. Recently broke below its key level here. Support. And it's now using this as a resistance point. Looks like it's going to go down to test this again. If it doesn't breaks, then it's going to go further down here. So be careful with that. If it does break below that, cut your contract. If not, hold it. That's my take on it. Oh, I forgot to mention one thing. I don't know if you guys saw this, but SPY formed a head and shoulders on the over here. You can see the head and the shoulders. This is the neckline, and so if we break below this over here, it's no good. Okay, that would be a bearish sign. Okay, just thought I forgot to mention that. It was something that I was looking at earlier. So just a small technical thing. Okay, Kodak calls, 750 calls expiring. Well, you should be deep in the money. Take the profits on those, dude. I wouldn't hold them till oblivion. Just saying. Boeing, okay, top money. Nike, 98 call, 87. Nike, 98 call for 87. Nike, bearish for now. Not looking very good here. I think you bought the calls too soon. Should have waited for the bounce here and the confirmation of the reversal. I think you jumped in prematurely here. Unfortunately, I'm sorry, but you did. You might have to cut that contract, in my opinion. Baidu, 117 calls, 87. Baidu. Another one that's going bearish, but then, oh, wait a minute, there's some divergence here. Interesting. I think this one is okay. I think that you would be okay with this one. There's a little bit of a divergence here with OBV and the stock price, number one, and number two, also RSI needs to cool off a little bit here. So I think that it will make a run up, Baidu. That's what I think. I think you should hold a second, like Baidu, you should hold that one, but cut your Nike. That's what I would say. ENPH, Enphase, 60 calls, 821. Yeah, it's looking all right. I think you should hold it. And if it doesn't break below this level and you see a bounce, I would add more contracts here, right? Average down. And then when you see the recovery, at least you didn't lose anything on the opportunity cost wise. VCRA, 35 call, 1016. Yeah, definitely not touching this stock. Yeah, it's a $1 billion market cap company. It's definitely manipulated. Sorry, Nico, we don't do less than 10 billion here. And trust me, you don't want to trade stocks that are less than 10 billion market cap. They're gonna get you in situations like this, where you buy it and then it sells off. Okay. Caterpillar 130 put. No, I wouldn't buy puts against Caterpillar. It's industrials, one of the best stocks in Dow Jones. Yes, it may be bearish for earnings, but I think that long term it's a winner, and I don't think it's a good idea to bet against this stock. We just went through this last week on our live stream. I mentioned that a drop down to this level here, 134, would be a good spot to buy it. In fact, I was saying 124. 124 was the point I wanted to buy it at, somewhere where it touches this down channel here. But I wouldn't bet against it right now. That's what I'm saying. AMD sell puts 160 next week expiration. Sell puts 160? Did you mean Boeing? I'm kind of confused. What's up, Daniel? Can you clarify this for me? Did you mean Boeing, AMD? I'm kind of confused why it's 160. McDonald's 195 puts. 195 puts. I mean, it's having a tough time breaking below this. If it breaks below this, then yeah, your puts are in play. If it stays above it, then I say cut. I have no idea if Facebook pushed their ER. I'm sorry, do not know how to answer that question. Rudy, I'm not sure if you know this, but Boeing already reported earnings this morning. Okay. McDonald's 170, 197.50 call 814. See, I like this case better. There's a better risk to reward as well, right? To the upside. The downside, yeah, you have all this, but then I don't know, you take on a lot of risk up here. The upside though, you can take on this much risk and get this much return. That's almost a 1R to a 2R kind of situation. So I like the calls versus puts situation for McDonald's here. And I also see McDonald's is part of the Dow Jones, right? So, you know what I'm saying? If you've been listening to the entire stream, you know what I'm talking about. McDonald's much better situation to get long than short if Dow Jones pushes up. Remember what we're talking about. Tesla 731 1535 call. For the purpose of this stream, I honestly dislike talking about Tesla because it's really a psychologically traded stock. But yeah, let's see what we can do here. Oh boy, I need to delete all of this later. It's looking bearish for right now. That's a risky one too, expiring this week. Yeah, your calls are dead by tomorrow if you hold it. Just FYI. XLI, September 18, $80 calls. XLI. Industrial, okay. Let's see here. September 18, $80 calls. You know what? I think this might be the best play that somebody posted here so far. Good on you, man, Mario. I think that's a good one. it makes sense with everything that we've been talking about so far, right? Think about if Dow Jones pushed up, right? Industrials would push up, and then this $80 is right where the resistance would be. If we can push up above $76, that would be nice. But playing this as a bounce over here, I think is a smart idea. And this is after confirmation, break above this resistance. I like this play. I do like this play. And I think the expiry is pretty decent as well with September 18. All in all, I like this play. It's the best play posted here today. If anybody else is listening and wants to play it, feel free to do it. Of course, I'm not a financial advisor, but I think this one has the best merit. There's good risk to reward ratio here to the upside, right? This is your reward. Oh, sorry. This is your reward, and you can take on as much as this risk here, giving you a 1:2 risk to reward ratio. Yeah, all in all, great play. I think that this one would be the one to watch and play out. Good stuff. Apple 415 for this, possibly Microsoft, possibly. Your strikes seem a bit far for me, in my opinion. That's all I'm gonna comment on those. Okay. Do you think there will be a move to financial soon? Yes, possibly. When sectors rotate, finance is usually the first one to get rotated into. All right. Cool. I think I'm going to end the stream here for today. I'm sorry for the people that I couldn't get your tickers to. Make sure you come back on Friday, and I'll get to them. Friday is going to be Recap Friday, where we're going to pick a new ticker for next week. So I hope that you come through to the stream, and I hope that you have a great remaining rest of the week. Okay. Remember what I said about Goldman Sachs. I'm bullish on Goldman Sachs. That's my summary from today. I'm bullish only if we can get a nice entry at 180, 190 range. That would be nice. This is another play that's good for the industrial sector. For a ETF, XLI, okay? A couple of good things going on here. Remember what I said about SPY, NASDAQ, and Dow Jones. We might see a wave up, and then also watch for the wave down on NASDAQ if we fail to break out of this over here, okay? All in all, thank you very much. Have a good day, guys, and I'll see you on Friday. So take care and peace.